Uranium and commodities have been rallying to the upside for about a month now. So, are we due for another leg up in inflation? And if so, is uranium the most asymmetric play in the commodities space? In today's episode, we are going to pit uranium against pretty much every other commodity, and we'll see who comes out ahead. Before we get started though, nothing in this video is financial advice. I am not a financial advisor. Please do your own due diligence. It's your money, your responsibility. With that said, let's go ahead and dive into our first chart here. This is the U.S. federal government's expenditures in terms of interest payments. In other words, how much did we pay in the U.S. just to service the interests on our debt? For Q4 of 2022, we paid a whopping $853 billion just on the interest of our debt. Now, a lot of people are pointing at this chart here, declaring that the Fed has no other choice but to pivot, but to cut rates because the debt is becoming so unserviceable and the interest payments are skyrocketing and all this other stuff. But let's take a deep breath. How much money is the federal government bringing in today versus at any other point in time? That's what we have to consider. And this is what this chart looks at. This is a chart of the ratio between the interest payments on the debt versus tax revenue. So we, from a ratio perspective, on a comparative basis, the interest payments have gone up compared to the tax revenue that we see. But they haven't gone up quite as significant on a historic basis. Look at how high this ratio was in 1985. Now, we still have a ways to go to hit those same levels. To be more precise, that'll take us to about a 93% increase of where we're at today on the ratio. So we still have a lot of ways to go before the debt becomes as burdensome as it was back in the 1980s. And a lot of these people, claiming that Jerome Powell and the Fed have no other choice but to cut rates. They may cut rates, I don't know, but they can take them much higher. According to this chart, if we look at this chart, this is saying that the amount of revenue that's brought in through the taxes is a pretty good amount to service the interest on the debt. Now, why is this important? Well, every single commodity bull market is usually coincided with a rate hiking cycle. And this is where we're at today. And so this brings us to where we're at with uranium. And this is actually a post from John Quakes. And this is total pounds of uranium held by SPUT, the Sprott Physical Uranium Trust. And as you can see here, as of January 27th, we have about 60 million pounds of uranium held by SPUT. And so to kind of review what we talked about before, annual demand of uranium sits at around 185 million pounds a year. So 60 million pounds across the span of about a year and a half is a significant chunk of that 185 million pounds. And as you can see here, even though it is a significant chunk, a lot of those pounds were accumulated within the first year or so. You can see here over the last year, there wasn't really as many pounds accumulated in uranium since 2021 all the way out into 2022. But we did have a little bit of a correction in the uranium space, as well as the entirety of the commodity space. So that's kind of understandable. So this is where we're sitting at today in terms of uranium supply, and uranium supply that's being held off and quarantined off by SPUT. Now, how does uranium perform compared to all of these other commodities? So here we have going all the way back to, let's go all the way back to let's say May of 2020. And why May of 2020? Well, that'll take us towards the end of the let's call it the liquidation a bit of 2020, where we had all the stock sell-offs. It's kind of a good reset point to kind of look at everything through the lens of. But if you look at it through that lens, we have uranium here in blue, up 56%. And this is the uranium metals price. All of these other commodities are either the metal or the energy unit. So we have uranium here in blue up 56%. We have coal here in orange at 408% up since May of 2020. We have copper up 79%. We have nat gas up 33%. We have nickel up 159% here in dark purple. We have gold up in violet here, up 14%. We have silver up 58% in green. We have lithium up in teal at 182%. We have oil up 326%. So where does uranium actually stand here? Uranium is actually still around this level here. Most of these other commodities have outperformed uranium. So this is actually quite interesting, even though we have seen a pretty rapid move up in the miners. The actual metal itself has moved up quite a bit, but when you compare it with all of the other commodities, the number one champion here is coal, up a whopping 408%. Now at the highs, it was sitting at around 715%. Right below that is oil, currently sitting at, what does that say? 326%. So uranium is, kind of underperformed all of the other commodities in the space. But let's take a look at how the miners have performed. And to do that, we'll compare URA, the Uranium Miners ETF, with all of the other mining or producer ETFs of the commodity sector. This includes everything from GDX here in orange, up 28%. SIL, the Silver Miners ETF, up 19%. COPX, the Copper Miners ETF, up 271%. Lithium, LIT, the Lithium Miners Index, up 244%. Oil Services, up 273%. REMX, the Rare Earth Metals ETF, up 255%. And MOO, the Agribusiness ETF, up 93%. So although uranium is here in blue. I don't know if you can see it or not, but it's right here. And uranium's actually had a pretty strong rise to the top. But it's still lagging behind a number of these other commodities, including lithium, oil services, copper. What else do we have here? We have REMX. So uranium is in an interesting space. Even at the highs here of November of 2021, it was still lagging behind REMX and oil services. So let's pull up all of these different commodities one by one and compare them with URA, the Uranium Miners Index. This is URA divided by LIT, the Lithium Miners Index. And as you can see here, uranium is historically cheap compared to lithium. Just to retrace back to these old highs here in 2011, you would need a 779% retracement back to the top. And as you can see here, we've been forming this squeezing pattern. We might be getting ready to break out. Still too early to tell, but we've been moving up this support line, and we have this squeezing resistance line to counteract the support line. So, we could kind of, hover around this squeezing air, this region here for a little while longer. But it does look like uranium has a lot of road to make up in terms of lithium. URA priced in REMX, the rare earth metals. Now, again, we see this same squeezing pattern here that we've seen plenty of other times before. Like, for example, on the pure URA chart, we have this squeezing pattern. We broke out of it, and now we retested it this month. And, URA is got a lot more upside than downside compared to the REMX price. If we do a simple retracement back to the top, we're looking at something around 106% retracement. OIH, URA versus OIH. So this is the oil services ETF. And as you can see here, we're about, kind of hard to tell. We look fairly valued in terms of OIH. Looks like we've got just about as much upside as we do downside. We do have this descending wedge here as well. Kind of hard to tell here, guys. It looks like we're hitting our head on this resistance line on the monthly. But let's see how this looks actually on the daily. Oh, there it is. So this line here might need a little adjusting. But yeah, I mean, we're getting there, guys. We're getting there. OIH versus uranium, a little too tough to call. You can't. It doesn't look like you can go wrong with either of these vehicles. URA versus COPX. Boom! Look at all this upside versus the last high of 2011. And one thing to note about URA, guys. URA came to fruition in 2011. The last uranium bull market spiked in 2008. So URA isn't even capturing this spike in uranium miners in 08. It's still, this is still an underrepresentation, an underreporting of what we could possibly expect in terms of rebound in the uranium price. So what do we see here when we compare URA to COPX, the Copper Miners ETF? We had this big downtrend line that we broke back in 2020, and we've been forming this accumulation pattern. We hit our heads on this resistance line, this ascending resistance line, and this ascending support line. You can make the argument that this might look like a Livermore pattern. I don't know for sure. I kind of get the sense that this peak here might need to be a little bit higher to justify that. But I mean, we are historically cheap compared to copper in the uranium space. So how cheap are we? Well, if we retrace back to the old 2011 highs, this will take us to around. Let me just do this again. This will take us to around 324%, a 4x. Pretty impressive. URA versus SIL, the uranium miners versus the silver miners. We do have a little bit more upside than downside. We did have this ascending channel that we broke down of. So it does look like silver has been outperforming uranium over the past several months now. But. Look at this monthly close here. Yeah, it's not the end of the month yet, but we're pretty, darn close. This is a bullish engulfing where the entire green candlestick engulfs the prior red candlestick or the prior candlestick in general. This is a pretty strong reversal pattern. It doesn't guarantee a move up, but the probabilities say that you're more likely to see a move up versus otherwise. So URA poised to outperform SIL. URA versus GDX, kind of a similar story here. We see the same accumulation pattern being formed here. Gold's been overperforming uranium for about a month now, but we have been moving on up. We see these two hammer candlestick patterns. A hammer pattern is another one of these reversal patterns where your buyers go all the way down, your sellers sell the asset all the way down, but then it's immediately gobbled up by the buyers. We're seeing a lot of these hammer patterns in the past several months. This is a very strong indication of upside, coming down the pike. And if we do a simple retracement back to the 2011 top, this will take us to around 239%, so a 3.4x. Not bad. And then finally, URA versus MOO, the agribusiness ETF, agriculture. You can clearly see this pattern here being formed. We are touching our heads on this resistance line. Are we about to break out? Let me know in the comments below. What do you think? And, there's just so much upside here, guys. Just to retrace back, it's kind of bring this ratio back into homeostasis. You've got to see an 856% move in the uranium price, holding MOO constant. And most of these commodities are not going to be held constant. They're going to move up with all of the supply shortages, attached to them. And the fact that we are in a commodity bull market. So to kind of recap, guys, uranium looks pretty undervalued. It looks like it's got the most asymmetry out of all of these miners, out of all of these commodities, minus OIH, the oil services companies. So that one's a little too hard to call. It looks like we've been descending down. Oil services have been outperforming uranium since about November of 2021, since we hit that high. And we have been kind of stuck in this descending wedge. But, other than that, the miners look in great shape, guys. Leave me a comment below. Which commodity do you think will be the star of the show in this current commodities super cycle? Really interested to hear your thoughts here. And if you enjoyed this video, go ahead and give it a like, give it a subscribe, and I'll see you in the next video. I really appreciate it, guys. Bye.